I'm Wes Warren. I'm here with Greg Stanley, and today's topic is back in the media, inflation. We kind of were worried about it in 2010, 11, 12, 13. Now it appears like it's real. It's already happening. And a lot of doctors have been calling in and wondering what to expect, what's going to happen, kind of what does this mean for me, what I have. You know, I got a practice, I got a 401k, I got some money saved, I got some real estate. And Greg, I know that you actually lived this. You actually were around and were in the financial scene back when this happened in the 80s.
Just after the dinosaurs were destroyed.
Right. Yeah. Can you comment on really what you're seeing right now and maybe what this might mean?
Well, let's go back a little bit here. For the last decade, we've seen behavior at the top, governmental behavior, we all thought was just going to be runaway inflation. And it just did not happen. And I've heard some of your good explanations for this, you know, with finding cheaper labor markets, all these different things.
Right.
But we were told it was coming, it's coming, and it didn't come. It didn't happen. And now we are seeing some signs through COVID, we threw 3 trillion, 3 more trillion, keep in mind the whole debt thing is only 20 trillion. So, when you keep throwing it on at that rate, you're going to double the debt, which is already high. So some things I look at. One is the price of metals, precious metals, have finally started to move. The people that buy these, I don't think they're as dumb as some people think. We think of them as kind of extremists. Maybe they are, I don't know. But all the talk of inflation for the last decade did not move gold and silver beyond their levels. It just stayed there.
Yeah, a little bit maybe.
And I saw people that probably stand to benefit from frightening those markets, still couldn't frighten them. And so we saw that happen, but now those markets are moving. Gold and silver, precious metals have gone up a pretty good jump and have stayed there. And I look every day to see if they're floating back down and things are settling back down. And I'm starting to think maybe they're catching up for lost time. There's something people need to remember about the inflation of the 1980s. There's people that believe in economics that it takes time for inflation to work its way through the economy. In other words, the forces that drive inflation. So if the government borrows prints massive amounts of money, it doesn't inflate overnight. It was the Vietnam War in the 70s. Some say that it took till 1980 for it to really take hold. And when it did, it's 10, 12%. For 2 years, 3 years in a row, it got up, incredibly high. Mm-hmm. And that's when the doomsayers all said, gold is going to $1 zillion and inflation is going to 50% and all that. It didn't really happen. But once you open those printing press floodgates long enough, you finally do see the inflation. And we're seeing it now. It's here. It's funny because it's just hit just about the time real estate is taking off. And you said I had lived through it. This is what we lived through. Real estate was taking off for reasons other than inflation in 1980. Inflation was taking off for who knows what, the Vietnam War, whatever it was. But people saw one as the solution to the other. In other words, real estate going up is the solution to this runaway inflation. Now, right now, we're seeing real estate going up. Well, my son just bought a house, and he is tearfully thankful to have bought a house. He stood in line. He had to bid on all these houses. And when he finally got one, I think he paid $44,000 over the asking price, which I guess is not unusual at all. He thought he had stole it at $44,000 over the asking price. You see a little of that. You see a little of this stuff about inflation and gold going up and all. You tend to put them together and say, I'll fix one with the other. try to remember they operate on different premise. This idea that you have to beat inflation probably is the number one mistake people make. You have to beat it. If you don't beat it, it will beat you, like it's got a club or something. And that's what makes people go out and do things that are just foolhardy. Couple things to keep in mind. The risks of the investment world appear to have never moved away at all. In other words, all the risks are still there, whether you're buying bonds, stocks, whatever. The risk is there. Even real estate, yeah, it's going up, but will it go up forever, or does it saturate and go back down? And so the risks haven't changed at all, but the yields are just about non-existent in everything right now except real estate. And what we'll see happen likely, you'll see different segments of the economy moving toward the light. In other words, the light right now is real estate. Mm-hmm. If inflation is the darkness, real estate is the light. So the first people to find it are like my son getting in line to buy a house. And then I tell somebody that my son stood in line to buy a house, and they say, oh, I'll buy another house, an extra house, so that I've got my hand in play in the investment market, and inflation will just make it more valuable. Well, keep in mind, inflation did not make this real estate more valuable. It was a factor of supply and demand. There are just no houses built for a long time. So this brings in what I would call, mom and pop investors. They can buy a second house. So they're buying a house, then they buy a second house. In the year 2008, when the real estate market crashed in Arizona, the average person buying a house, it was their fifth property, meaning they had really doubled down, so to speak, and we're getting into this big. So mom and pop start buying a couple of houses. Then you get investors buying houses. Those people have yet to arrive on the scene. Yeah, there was the house flippers. They've come and gone. In my neighborhood, there was a time of flipping about 10 years ago.
Yeah, but they have to sell it to an end user or else that market dies real quick.
Or you sell it to another flipper that somehow sees value.
Yeah.
I've seen it, but not very often. Yeah. And so finally, you start to see corporate investors and really just corporate people moving their pension monies or whatever into blocks of real estate investment trusts, all these different things. That's kind of the cycle. Because you asked me, you said you lived through this. That was the cycle.
Well, people try to beat inflation through debt, buying something through debt.
Yeah.
And which is real estate. I mean, that's the easiest way to use debt. And that's the strategy. That's what people, and we haven't seen that yet. But boy, when that starts happening.
What's a good question, Wes? There's so many financial advisors out there now. Every third person on the internet seems to be willing to give you financial advice, and you can park your money with them. Eventually, I believe that what you said will come true. They'll be saying, if you want to beat inflation, you got to get with something that beats inflation. And
leverage.
Never forget the risk return ratio. The more return you get, the more risk you take. Now, the truth is that's actually a very narrow window. When you go beyond that little window into higher return, even another 1%, the risk goes off the chart. I remember when we talked a lot about municipal bonds, there was bonds going out at 4, 5, 6%, and people were doing that, and they're pretty happy with that. But in Puerto Rico, there was nursing home authority bonds and some different kind of edgy things going on out there. And because of Puerto Rico's status with America, those bonds were also tax-free. Well, people bought them thinking that the federal government of the United States would back them, even though there was nothing to prove they would. And the return on those was about 9%. In other words, it was pretty high above what was thought of as sane bond buying.
Okay.
3%. And those people lost. It was terrible. I still get calls from people that were tempted to do that, thinking our government would back that up. Didn't work. And so
Okay.
this is a time to get back to the basics. The risks have not changed, but yields have just about disappeared.
For the average doctor, Greg, they've got probably some real estate, maybe a practice, obviously their home. They're going to have some stocks, I'm assuming, maybe even some bonds, kind of a portfolio that's pretty normal. And then they might be practicing. And for doctors coming up on retirement, what kind of advice would you give them?
That's a good question. A couple of things to keep in mind. A lot of people in stocks know that their broker can't predict the future. They know they can't predict the future. So they're kind of hanging on to the buy and hold approach. I'll just hang on to these. And they're kind of hoping they can hold on to them long enough to see them come back if they go down. But a lot of our doctors, the people we work with, as you know, Wes, the clock runs out. They have to have money. They have to retire on money, not mutual funds, not
Right.
stocks. And so, at one time, that's where bonds were fantastic because they could give you a monthly income or yearly income, and you could actually retire on it. But now the risks are so high and the yields below 1%. And risks higher than they've ever been. Yikes. So what would I do? A couple things. Number one, I'd be looking to change my future. For example, a lot of people, they go, oh, I just woke up and I'm 68 or I'm 71 or whatever. I guess I'm too old to practice. I got to sell this thing. Man, cutting off that income in times like these is treacherous. Number one, you want to keep your income as long as possible and be able to sell for a pot of gold if possible at the end. See, what doctors do is they go, okay, I'm done. I'm just going to sell. They don't realize people don't buy dying practices, not for any kind of premium. They steal them. I just talked to Dr. Peterson. He was working with one of his clients who can't sell his practice. He can't sell it at all, at any price. And that's what our concern is for a lot of people. There is no going to sleep at the switch and getting to your destination here. You got to drive this thing the whole time. You got to keep yourself digitally up to date. Your practice has to be able to, do digital marketing. You have to keep the flow good. You got to have a lot of hygiene. You got to have all those things to have a viable practice that can sell when the time comes for top dollar. And until that time comes, keep you afloat and hopefully saving money. Yeah.
So really the message, stick around as long as you physically
Yeah,
can.
that really hasn't changed. When we saw government spending and government deficits like we did over the last decade at Whitehall, we said, hey, try to stay in practice.
Yeah.
And I don't think a lot of people felt the seriousness.
No, I would agree. Yes.
But now I think it's starting to hit home.
Well, yeah, when you have inflation running at 12% or something like that, it eats away your money pretty fast, especially because you have to realize it. You have to realize your losses because you have to live on that money. So you have to sell your stocks, sell your bonds, sell what real estate to live on it. All of a sudden, you're realizing those losses instead
Keep
of weathering
your income going. If you possibly can, wait till age 70 to take your Social Security. It'll be a bigger number. Yeah, I know if you drop dead, you didn't get enough money, but you're dead.
Yeah.
There's that, Yeah, get that Social Security at its highest number and keep your practice viable. Now, one of the approaches we use is to stay viable through an associate if you have to. I have people that tell me they're 50 and they really are killing it and they don't really want an associate. Well, it's fine.
Yeah, right.
But a person that's 60 or 65 and you want to stay in the game till you're 75, you'll probably be needing an associate somewhere along the way. You better start learning what that means. As somebody says, I tried an associate twice and they both ended up in court or they both ended up in disaster or, they have horror stories.
Yeah.
Yeah, that's not always the case. We found that 70% of associateships can be successful if you're careful on the way in and if you manage it properly. Because you've tried it doesn't mean you tried it, it didn't work, doesn't mean it doesn't work.
Yeah, I would agree. I would say just looking around, probably only 30% work. But with a lot of tricks of the trade, you can get it to 70%, definitely.
A lot of these 30 percenters you're talking about, Wes, people that I've met that did their own they have a tendency to end up compromising until it's worse than marriage.
There's a million mistakes you can make. Marriage is a 50-50 proposition, but that doesn't mean a marriage can't work out. There are rules to follow in bringing on an associate that can increase your odds, definitely.
You probably want to be about as careful with an associate as you would with a potential spouse choosing one.
Yeah, I think so. Yeah. Anything else? Any other things that you see coming? What's this mean for the future of the dentistry, but also like the country? Anything that
Let's look at the investment world.
Okay.
It has turned into a literal gold mine for those managing money. They don't even have to steal your principal. They can manage your money. They have all these hidden fees. There's sometimes 9 different fees in mutual fund, all these fees, and they can end up with all the gain.
Yeah.
You can manage it yourself, and statistically, you'll probably lose money. So you can either get a tiny return having it managed or no return doing it yourself, statistically. It's kind of a dark picture, but it has proven to be incredibly lucrative for those firms and for those individuals. For the rest of us that would like to turn it into an income or a retirement or whatever, it just isn't viable. There's no place we can go that could pay us anything like what we need to live without taking risks that people would wonder what we were thinking when it ultimately crashed and burned.
Yeah, I will say, having parents and people I know get on a fixed income and literally watch the money disappear, it's a pretty disturbing reality. Let's put it that way. It really is tough on them. It's pretty strange to just see your money just disappear. Don't be in a hurry to retire. If I get it, a lot of people don't like what they do, but a lot of you do. I'd say most of our dentists do. Find a way to practice and practice longer.
And what we're really talking about in a lot of cases is, to a degree, giving up treatment in favor of you running a practice that has associates. Associates, a lot of them never want to own or run a practice. They want you to keep the new patients coming, keep the income going, keep the payroll paid. And for that, they'll let you take your cut. If you want to join that group, you can. Otherwise, you have to do what Wes just said. Ultimately, cut the umbilical, go on a fixed income, and live with the enhancement to Social Security of 0.25% every 2 years or whatever,
And if inflation goes bananas, really worry about that. You know what I mean? Who knows what's going to happen here? The spending has been crazy before the COVID spending. Now you heap on, I don't know how many trillions.
I know, Wes. Everybody was so down on President Obama because he took over at 6 trillion of debt and went to 9 trillion or something. Well, it went double that under the next president. In other words, and it doesn't matter who the president is. They got to do all this stuff, but we have to live with it. And so a couple of thoughts. Costco just announced that we should expect higher prices in several departments. They mentioned the meat department and a couple of others. You'll be driving on your car with tires. You can see the air through the tires. You'll be buying meat so tough that you don't have the teeth to chew it. You know what I mean? It's time to get serious, take a stand. And that stand is, I'm going to keep my income going from practice as long as I can. Wes, before World War II, people's incomes, over 50% of their incomes were people working in the farming community. They either owned a farm, worked on a farm, whatever. And they worked until they died. And then they introduced Social Security in 1935. And pretty soon the idea was to get some people out of the workforce onto Social Security and create more jobs to get us out of the Depression. Well, now people see it as an entitlement and, we got to have this retirement money and so forth. That's for people, that can live on what Social Security pays. I haven't met a doctor yet that can live on does live on what Social Security would pay them in retirement. Yeah. They need more than that. And yeah, they've saved a lot of money. A lot of them can live off the principal, they can eat up the principal. And so the picture isn't all bad there, but here's what we're defending that our parents probably didn't have to defend, or certainly our grandparents. And that is a lifestyle. We like the lifestyle. I grew up, I saw this on Facebook. Somebody said, repost this if you grew up without air conditioning. And most people said, what? How could you do that? Well, I lived without air conditioning and I hated it. I hated it when I was doing it because I would go visit somebody that had air conditioning and I thought, this is a better life. And so people kind of have in their mind a better life. That's kind of where we're at. How far back do we want to retrench ourselves so that we can live without working at all? That's the question. And you say, well, I've got $1 million saved, or I'm going to sell my practice for $800,000 or whatever. I have a relative. She just turned 96 and she is seeing the end of her funds in a nursing home. It's very frightening for her. She lived, her home was the first one I ever experienced air conditioning in. And they had good food and they had nice things. And she's getting returned to the populace. And if you don't want to be returned to the inmate population, you better get on the stick. And you either save a ton of money, cut your costs, or figure out a way to keep your practice going. And not just that, you got to sell it in a wheel stand, just like a motorcycle. You got to sell it while it's accelerating. Right now, people are getting $1 million for the practices. Some getting 2 million. It's a mindset. You can't let yourself buy into a mindset that'll ultimately sabotage you. There's investment mindsets that are bad. Surely the brokerage world has something for me. No, you have something for them, not something for you. Surely my practice will be worth a lot of money. Not if you let it fall apart, and go to seed and let the patients disappear. Let this be your warning. You need to really take this to heart.
Okay, thanks, Greg. I realize a lot of you out there have always wondered about what we do, how we help doctors add associates. And some of you even called us and thought about it. And if you're at all interested, we'll be glad to do a session with you, spend time with you talking about what it would be like, really look at your practice and really see what that would mean for you. And if you have talked to us in the past and want to talk to us again, we'll gladly take that call as well. But I will tell you, our schedules are very limited. Every time we do these type of things, we only take 10 people. So you can click and fill a spot so you get an email link, or call and ask for Lori, and she'll put you on our schedule.
That's a fact, because a lot of our clients have found their way back to us now after COVID. And so we can either be talking to you or we can be coaching them. And so that's about what we have room for in a week's time. So if any of this is meaningful to you, get on, let's talk about it and see what's feasible.